So we talk about cryptocurrencies that have been battered by the bear. We talk about dead cryptocurrencies, cryptocurrencies that just haven't made it, guys. We look at Bitcoin, and you can see one thing. Bitcoin is just trending like a beast. It's been bought up and bought up. So we're going to be talking about Gala Games today, and we're going to be talking about dead cryptocurrencies. So you look at this chart, Gala Games was actually at 85 cents. It's currently trading at 0.02 cents. So why could this be potentially the best buying opportunity for Gala Games since 2021? We're going to talk about range trading, and we're going to dive into the biggest range, or one of the biggest ranges within the whole of the crypto space. Right, guys. So, what is a dead cryptocurrency? A dead cryptocurrency is surely something that does this all the way from zero, all the way up to 85 cents, and then back down to pretty much zero and stagnant for such a long period of time. So, is Gala Games dead? We're going to read a lot out of this chart, and you can't see much from this chart at the moment, guys. This is the higher time frame, and this is what I'm talking about it being the longest range within the crypto space, or one of the longest ranges within the crypto space, with the biggest gains within the range. So what I'm going to do is I'm going to stick the top of the range on, and I'm going to stick the bottom of the range on, and then we're going to look exactly where we are. We're going to delve in deeper into the shorter time frames, and then look for opportunities on the shorter time frames to see exactly what the indicators are telling us, whereabouts we are in the range, where resistance is, where support is, and how we can get an edge in something like this. So simple, guys. We're going to stick the top of the range. Top of range, remember, is going to be the one that's got the most sticking points. So the top of the range is going to be here. We've had a couple of wicks to the upside, a couple of wicks to the downside. However, this has touched once, twice, three times, four times, and it's rejected four times. So let's measure this range. How long is it? From the start here, all the way to where price action is. Now, this is the weekly, guys. This is 142 weeks, which is 994 days. So it's a 994-day range. Let's stick the bottom of the range on there and measure exactly how big it is. There's the bottom, guys. How do you know it's the bottom? Because it's touched once, twice, three, four, nearly five times. Now, we need to zoom in and find out exactly where exactly we are in the range. You can see we're near the bottom of the range, and you can see we're getting a bit of a buy up. So we're going to have a look at the indicators very shortly to find out exactly what could potentially happen next, how you can take advantage of taking a trade within a range like this. First thing we're going to do is measure how big it is. So there's the bottom, there's the top. 397%. So that's nearly a 4x, guys, in this little tiny range here. Now, is Gala Games dead? If Gala Games was dead, why would people be buying here? Why would people be buying here? Why would people be buying here? Why are we getting a big buy up candle here on the weekly? So what I'm going to do next, guys, is I'm going to find out where the next sticking point is. The way I'm going to do that is a fixed range volume profile. So I'm going to take it from the start of the range all the way to the end of the range. And this is going to give us an idea where the biggest amount of trade and volume is, whether we're above that, whether we're below that, whether that's a sticking point. So look at this, guys. We're exactly at this point now. Let's add this point in. So the aim of the game by the end of the week is for this candle to be above 0.02346. So is it a good buying opportunity now? From an investment perspective, we talk about investing, guys, and bringing averages down. So preparing yourself here at this level, and then knowing when you fall back, you can average your position down here. If you're wrong, then you don't get to average your position. You live to fight another day. That capital goes elsewhere. If you're wrong, then you can be right, is what I'm saying, guys. From an investment perspective. Now, from a trading perspective, guys, let's delve into the daily on here. You can see clearly we've got a trend line. So we've got a strong trend line here. It's been touched plenty of times. Now, this is going to give you less this is going to give you less risk, and it's going to give you more reward. However, you're not going to be able to take advantage of the full range on a trade because you've got to wait for one thing. You've got to wait for the break of trend. So if you're waiting for a break of trend, that's giving confirmation that there's a high probability that this is the low. If this is the low, that's where you can protect yourself. So if you get a break here, put your low, a stop loss, sorry, below the previous low, you're shooting for the swing high, and that's giving you a 2.04 risk to reward. Is that good enough? Talk about the bullseye strategy, guys. I want a minimum of 2-to-1 risk to reward. So that's just about good enough. In that hypothetical scenario, is it going to play out like that? Probably not. How could it play out? Something that's more volatile. If that was the case, what would that do to your risk to reward? Bring it up. So how could you take advantage of that? You get a break, guys. You take out the previous lower high. What does that do? Signals the bulls have got control. You've had the break. You've taken out the previous lower high. What do we need to do next, guys? We need to retest previous resistance. Hasn't happened yet. We need to retest previous resistance as support. So for us to do that, what do we need? We need a pullback. How will that play out, guys? It'll look something like this. We'll stick our fib tool on there, and it'll look something like this. Put in the high, you're coming back down to the 618. In this hypothetical example, come back down to the 618, test this area as support rather than this area because it's the 618. Then it brings your risk to reward to 3.91. And guess what? This would be support. This is hypothetical, guys. You've got to look at things and you've got to forward think and you've got to analyze exactly what could happen. If it happens, how you could take advantage of that. If that doesn't happen, how you could take advantage of a different scenario. Just watching. That's half the time we're trading, guys, unfortunately. But like I say, from an investment perspective, you can take some good opportunities here because you've got two positions to average down on. You've got where price action is now, 0.02301. Then you've got all the way down here, the bottom of the range, 0.01236. So just as an example, small allocations, you add $50 here and $50 here. Price action pulled back down here. That would bring your average down to around about here, 0.1780. So 0.1780, if you put all your eggs in one basket here, you'd have 0.2345. That allows for cheaper price ultimately, and this is averaged out of 24.48. So the downside here is 47%. If you average your position down, 24%. You get your position 24% cheaper is what I'm saying if you manage to get those two. From a trading perspective, I always want that break, guys. I always want the break and I always want a signal that there is some kind of momentum. So we'll have a quick look at the indicators now. You can see this is strong. We've got a stochastic that's just about to cross. It's in an oversold position and we need another turn to the upside. That's another thing that we can monitor. So we need another turn to the upside and not getting any divergences. We're not getting any clues on the RSI. However, it is becoming really oversold. So we've got two indicators that are telling us that it's oversold. We've got another turn for the bulls. As we have another turn for the bulls, if we crack trend, that's when you need to think about trades. So that's when I'll be thinking about trades. And you've got the two options, obviously, guys. You bring your risk to reward down, get the retest, make sure that you've got a good risk to reward, protect yourself below the previous swing low. However, if it went wrong from a trading perspective, could do this, guys. If it went wrong from a trading perspective, you get rejected here again, you come back down. So if you take something here, what happens? That's not the previous swing low, and you go down to this level where the investors are buying up at the bottom of the range, and then you get a reaction here. So it's always good to wait for momentum, is what I'm saying. So that's the daily. What about the weekly? Look at this, guys. The weekly is nearly reset. What happens every time that we hit oversold on the weekly? Get a bounce up, get a bounce up, get a bounce up. So we're waiting for that bounce up. That's the weekly. Look at the 3-day. And look at that, guys. That is heavily, heavily, heavily oversold. So basically what I'm saying is Gala Games dead. Looks like it from there. You zoom in, guys, do a bit of analysis, and it is definitely not dead as far as I'm concerned. It's not something that I'd be putting a lot of my capital in. It's something that I would put like 1%, 2% of my capital in if I was investing. From a trading perspective, guys, I'm looking for in and I'm looking for out, and I showed you exactly how I would do that. So I'm going to be doing Cardano next. I will see you in the next one.